Hey, what's up, guys? How's everyone doing today? This morning, I know this is early for the West Coast people. I'm on the West Coast. I don't know why I scheduled this for this early, but thank you guys for joining me. Tonight or today, I want to talk about some best practices for trading because in the flow class, I get a lot of questions that are beyond what I try to teach in the flow class, but they're questions that I get asked every morning. So I want to go over some of that stuff today. This is not the flow class on Thursday night. So I'm not going to teach you guys about how we use the system. I'm going to go over more some of the best practices for how we use it. I'm going to start with some general trading tips that will help with flow also, but they're just general trading best practices. And then I'm going to go over some flow specific stuff, which again is some of the questions I ask every day in the flow class. I do answer those in the flow class, but I want to go into them a little bit more here. And then I have an example of some of the rules that we follow for flow. We have rules for when we exit trades that go against us, and they're very specific rules. And I'm going to show you an example of where if you didn't follow those rules, you would have taken a bad loss on a trade, where if you did follow the rules, you would have had an amazing gain. So I'm going to show you a specific example of a flow trade and the rules that we follow. I'm also going to go over some of the questions about exiting flow trades. We get a lot of questions about that, and there really isn't a good answer because depending on your trade style, that's going to dictate how you exit trades, but I'm going to touch upon that as well. We get questions about in the flow, when you guys alert a specific trade, how come you don't alert when the big money exits? I'm going to cover that with the specific example that I chose today as well. That's going to be at the end. So I'm going to start with general trading best practices. I am 7-Star Mike. So on the screen right there, those are all the ways you can find me. If you have questions once the seminar ends, you can always reach out to me. On the left there where it says 7-Star Mike, that's me, where I do some technical analysis, some of the personal trades that I do. On the right, that's Trade Talk Media. That's where I do more flow trading, specifically flow trading. It's not all geared towards flow trading, but that's pretty much where I'm trying to concentrate the flow. So you get two different types of information on both of those names. They're both me though. And I'm going to start off again with just some general trading best practices. I'm going to give you guys a link to where you can download this document. I have 22 tips for trading success. I'm not going to go over all 22 of them. I'm going to cover probably about half of them, but I'm going to run through this section just because I'm going to give you guys the link where you can actually download it and read it in detail if you want. So I'm just going to skip over a bunch of them, and then I'm going to run through some of them pretty quickly. The first one I want to start with is the first one that I have listed on here, which is plan your trade. Anytime we go into a trade, we have to have some kind of a plan. So a lot of people will just kind of find some kind of a random trade idea. They'll go into the trade and then they have no idea what they're doing. And that doesn't work. Surprise, right? It doesn't work if you have no plan as for what you're going to do. So when you enter a trade, you've got to have some kind of a plan. The plan might be set up after the bell as far as tomorrow. If this news comes out and this stock takes off, I'm going to enter here. It might be something in the heat of the moment where a headline comes out and you say, okay, if I see volume come in, I'm going to enter the trade. But you need some kind of a plan. You want some kind of a plan for the exit also before you even get into the trade. And you won't have that ahead of time as far as a specific level, but your plan might be, I'm going to trade a trend line breakout. And the plan for the exit would be, if it breaks below that trend line, I'm going to close the trade because my trade idea was invalidated. So regardless of the type of trading you do, you always want a plan, and you want that plan ahead of time. You don't want to enter a trade and then scramble to figure out what you're going to do with it. Now, again, the exit won't necessarily be an exact level, but you have a plan on how you're going to exit those trades. You want that kind of all laid out in front of you. So when you start trading, you have a trade style that you stick to. And the worst thing you can do is have a plan but not trade your plan. So number 2 is trade your plan. This happens to everyone. It's happened to me. I've seen it on social media all the time. How many of you guys said, okay, I see this trade entry right here. I like this trade idea. I'm going to get in if I see some volume or if it breaks above $100.50. That's my entry. It breaks $100.50. I'm going to get in. It breaks $100.50. You see volume and you just sit there and watch it. And then 3 minutes later, it's up $103 and then $104, then $105, and you're going, oh man, I told myself if it broke $100.50 with volume, I was going to get in. And it did that, but you didn't get in. So once you have your plan, you guys need to trade your plan. I want you to have kind of a strategy or an idea in mind. And once you have that, you have to test these out. You don't want to just randomly start doing 150 different trade ideas and see which one works. Find something that you like, whether it's chart patterns, whether it's flow, whether it's some strategy from someone, whatever you do. I want you guys to really stick with that plan and start taking all the trades that meet that criteria and then trade them. You have your plan in place, trade it when you see your setups. I see it all the time. People say, hey, when this happens, I'm going to do this, and then something happens and they don't do it. So once you have your plan, stick to it. See these out, right? You have an idea of a way you want to trade, and then when you see those entries, take those trades. Number 3, this one's hard for a lot of people. Cut losses quick and let winners run. When you're new to trading, you do the opposite. You're in a trade and it goes against you and it's down 40%, then 50%, then 60%, and you just sit there and watch it go down, down, down. But then you're in a trade and it goes up 20%. You go, oh yeah, I made a profit, and you cut it. Well, mathematically, that doesn't work. You can't take a lot of 40 and 50% losses and a lot of 10 and 15% gains and be a profitable trader. So what you want to do is when you're in a trade, and this is going to be different for flow. I'm going to talk about this a little bit later. So in general, when you're trading, if you're in a trade based on a certain set of criteria, if that criteria is invalidated, you've got to cut that trade the second it's invalidated. So if you have a trend line and you're going to enter a trade when it breaks above that trend line, maybe you have some resistance and that trade breaks above resistance, so you're going to enter the trade. When it breaks below that resistance, your idea was invalidated. You've got to cut that trade. The opposite is true for winners, right? When you have something that's making money for you, don't just freak out and cut it right away. If you have a trade that's working out for you, let it do its thing. Let those winners run. So as new traders, we kind of do the opposite. You're in a losing trade and you just hope it's going to come back, so you never cut it. And that doesn't work. Again, mathematically, you've got to have more profit than loss to be a profitable trader. But for some reason, we let these losing trades just go and go and go and go, and we never want to cut them. So you've got to learn to cut those losers quick. Now, again, when I talk about flow trading, I'm going to show you kind of the opposite of that, but we have specific rules for why we do that. I'm going to skip that one. Again, I'm going to give you guys a link to download this so you can read all of these in detail. But one of the best tips I can give you is remove profit and loss from your screen. And if you guys are with Black Box Stocks, you know Maria. She's one of the most amazing traders I've ever seen and had the pleasure of trading side by side with. I've actually not met her in person, so when I say side by side, I trade with her in the trade room every day. When I was first starting out, Maria gave me this tip: remove profit and loss. And the reason for that is you don't want to trade based on profit and loss. You want to trade based on technical analysis or fundamentals or flow, whatever it is that's getting you into a trade. You don't want to manage that trade based on the dollars that you're making or losing. We'll see a lot of people say, oh man, I was up 50 bucks, so I took the trade, and at the end of the day, it could have been up 300. Well, the reason for that is, one, the stock market has no idea what your entry is for any trade you've ever taken. The stock market doesn't know your entry, and honestly, it doesn't care. So if you're in a trade and you're up $50, that $50 has significance to you, but that $50 has significance to no one else. So the market isn't reacting to the fact that you made $50. The market is going to react to supply and demand. And that $50 profit level where you might take that trade, that might be nowhere near any supply or demand area. So if you're trading for your profit and loss, and let's say you're down $100 and you cut the trade, you say, oh man, I don't want to lose $100, so I'm going to cut this right here. It's reached my max loss. Well, if you're not looking at a chart, what if you cut the trade when you're down $100, but the underlying drops another 50 cents before it finds support and then bounces? And you say, oh my God, I just cut that trade and 2 minutes later it reversed and went up, I would have made money. How many of you guys have done that? Is there anyone here who's cut a losing trade and then 10 minutes later they say, oh man, I should have held that one. It bounced right after I cut it? There's a few of you guys responding that that happens. That happens for a reason, right? Why is it gonna bounce at a specific level? Because the level that it bounces is where it found support. So if we're cutting it based on a profit or loss level, and we're not paying attention to the chart where there's support and resistance levels are, we're not really letting the trade work out. So if you're watching it and you're going, I'm up 20 bucks, I'm up 30 bucks, I'm up 40 bucks, ooh, I gotta take it. What you're not paying attention to is that there might not be resistance for another $2 on the underlying, which your $40 profit might have turned into 60 or 80, and you're trading based on that dollar amount, not based on what the chart says that trade might actually do. So if you're taking these losses and then seeing something bounce right afterwards, what's actually happening is you're not focused on the support level that the stock is focused on. And a lot of times when that happens, it's because you're watching the dollar amount. You're not watching the actual chart. The chart will show you where supply and demand is. You want to know that support and resistance level. Now, if you're first starting out, or if you've taken a bunch of losses in a row, it's okay to say, you know what, I made 50 bucks, I'm going to close the trade. That's okay. But as you get more advanced and as you get more time in the seat, you don't really want to trade that way because you want to let the chart dictate what the trade might do. So you want to watch those price actions, you want to watch those support and resistance levels and see how something reacts around those levels instead of just having a blanket $100, I'm going to take profit. And people do this all the time. I'm actually going to talk about exits when we talk about the flow. They say, what percentage should I exit this trade at? Or should I take a certain dollar amount or percentage gain? And to me, that doesn't work. And it's the same reason as I was just talking about, which you don't want to trade based on a dollar amount or a percentage because those numbers have no meaning to anyone but you specifically. The stock market doesn't rely on your entry to determine support and resistance levels. So if you say, I want to take a 40% gain, that's great, but what if there's no resistance until that would have been an 80% gain? So we don't want to trade based on profit and loss. We don't want to trade based on a specific percentage gain or loss. So take that profit and loss off your screen. That's hard for some people, but Mario actually gave me that tip probably at this point 5 years ago, maybe 5.5 years ago. And it was one of the best things for my trading. My trading improved almost immediately because I wasn't worried about some arbitrary number that had meaning to me, but no one else. I started listening to the charts and my trading improved from that point. The next one, trade your style. This comes into flow trading as well, but just general trading, you want to trade your style. And what that means is you should trade in such a way that matches your personality. What I mean by that is I'm typically a short-term trader. So when I take these longer-term trades, I'm going to mismanage them a little bit more than if I was in a short-term trade because my personality is short-term. Grab those profits, lock it in, move on to the next one. So if I'm in a trade that's maybe 6 months and I see a decent amount of profits in a specific short time period, let's say 2 days, 3 days went by, and there's a resistance level that it's kind of bumping its head against. My personality is short term, so I see an immediate gain and a resistance level. I'm going to take those gains because that's my personality. So if the contract has 6 months of time on it and I'm trying to trade it short term, that's typically not going to work as much. It can work, but you're not going to reach your maximum potential because a 6-month contract might not necessarily play out in 2 or 3 days. So even if it hits a short-term resistance, 4 months later, it could be a completely different story. So you want to know what your trade style is. Are you a short-term trader? Are you a day trader? Are you comfortable swinging things overnight? Are you comfortable swinging things for 3 weeks, for 6 weeks? You want to find your style. And if you take trades that are outside of that style, I think what you're going to find is that you're going to mismanage those trades because it's a conflict with your personality. So I find myself fighting all the time, even on these flow trades, which I know are long-term potential. I'm still trading them on a shorter time frame if I have the opportunity to, because my personal trade style, my personality is that short-term immediate gains. But by doing that, I'm giving up a lot of the longer-term bigger gains. And I'm going to show you guys some statistics on the flow coming up, where it's going to blow your mind on what these trades do. And looking at the stats last night, I realized that I'm actually not doing anywhere near what I should be doing. And that's scary because my success rate with these flow trades is amazing. Very high success rate with these trades, but if I just held them longer, I could probably have been retired 5 years ago. And that's kind of an exaggeration, but it's kind of not. So my trade style is shorter term, and these longer term flow trades, I'm mismanaging them because it's a conflict with my personality. So that's actually something I'm going to be personally working on next, is to be able to hold these trades longer. Even though my personality says I'm a short-term trader, I'm going to show you guys these stats that are going to show you why some of these flow trades are better to be held longer term. So you want to know your trade style. You want to know what fits your personality. And the next one is don't force a trade. We get a lot of people that say, hey, you guys aren't putting out trades today. What's going on? Well, if we don't see the right setup, we're not going to put out a trade. We don't put out trades just to say there's 17 trades that you could have taken today. We're going to put out the high probability trades. And when I say these high probability trades, I'm actually talking about the Black Box Stocks app. If you guys are joining us from Twitter and you're not a member of Black Box, I'll actually give you a link at the end of this if you want to join us. It'll be a little bit of a discount. You can try us out because a lot of what I'm talking about when it comes to flow is about the Black Box system and how we use it. So if you guys hear me say Black Box, Black Box, Black Box, and you're not a member, I'll give you a chance to join us with a discount if you want to. This isn't a sales pitch, and I'm not going to pressure you guys to join it. So I'm just going to say that maybe once or twice. So when I talk about these high probability trades, I'm talking about the app. When we send these trades to the app, they meet a certain criteria. Okay, we're looking for something very specific. That's why our success rate is so high. And I'm going to give you the number. It's 90%. It's actually higher than that, but I'm going to show you the spreadsheet why I have that number at 90%. When we push trades to the app, around 90% of them generate a profit. The reason we're so successful with that, and that's a number, if you ask a bunch of your trading groups or trading friends, are they 90% successful? Most of them will say, no way, they're not even close to that. That's a very high number. The reason we have a 90% success rate is because we're very specific about what we're going to trade. And if we don't see the right criteria, we're just not going to take that trade. We're very specific. So people will say throughout the day, hey, I haven't seen any alerts yet. Are you guys okay? Are you finding the right stuff? Are you paying attention? What's going on? And when we don't find the right criteria, we're just not going to push out a trade. So that means if I don't place a trade today, I'm okay with that. If I don't see the right setups in the flow, if I don't see the right setups in the chart, whatever it is that I'm looking for that meets my personal criteria for an entry, if I don't see that, I'm just not going to trade. Now, I have the luxury of being a full-time trader. This is what I do for a living. So I also have the luxury of not having to make money today. So if I don't see the right setup and I don't place a trade, it doesn't freak me out. That's part of the job. There are days where you just won't find what you're looking for. So I'm not going to force trades. When I started trading, I used to do that. I have to make trades. I have to make money. This is what I do for a living. I've got to make money today or I'm not doing my job. Well, it doesn't work like that. If the trade isn't there, I don't take it. Don't force trades. If you're bored, don't look for something that might work. Wait for the right setups. A lot of people are forcing trades. And when I stopped doing that, that was another pivot point in my trading career where my success just increased dramatically. I used to look for trades because I thought I had to be in a trade at all times. And I actually started making a lot more money when I started trading a lot less. And the reason for that is I was taking less trades, but I was taking much higher quality trades. So if you don't see the setup you're looking for, and you'll see this with the app, there are days where we might send 1 or 2 trades. There are days where we might send 6 or 7. The days where we're not sending a lot is because we're not forcing any kind of a trade. If we're sending something out, it's going to be a high probability trade. Now this one's going to sound a little weird because as a flow trader, this is exactly what we do. So one of the rules I have on here is don't follow other traders. Now what I mean by that is you don't want to go to the internet, stock twits, and find someone saying, oh, XYZ is great, you should trade it. And then you just go and find XYZ, pull up the chart and say, okay, I'll trade it because someone on the internet told me to. Now, we're also in a group of very successful traders, and the moderators will call out specific trades as well. What I don't like is when people are just waiting for someone to tell them what to trade. The reason for that is the person that's placing the trade has a different account balance than you guys. They have a different risk tolerance than you guys. They have a different trade style than you guys. Okay, not everyone. Some of you might have the same balance and risk appetite. But in general, some of the people that place these trades are going to have a different trade style and environment than the people that are following them into the trades. And I see this in the chat room all the time. If you guys are members of Black Box, you know who I'm talking about as the moderator, and you know who I'm talking about that comments all the time. Hey, do you see this? Hey, what about this? Hey, are you swinging this? What are the support levels for this? What are the resistance levels for this? Are you going to hold this overnight? They ask all these questions because all they're doing is following another trader, but they have no idea what they're doing themselves. So they're relying on that other trader to tell them what to do as far as when to enter and when to exit. The problem is that other trader might have a different risk tolerance and trade style than the person following them. So what happens is, let's say someone says, hey, I'm going to enter this trade, and you follow them into that trade. And that trade drops and you lose, let's say 50% of it. And that person that opened the trade, they can handle a 50% loss, but you just decided this is a successful trader, I'm going to do exactly what they do. You can't handle that 50% loss, or maybe you sized it differently. You're going to have a different experience than the person that put out the trade. So I don't like when people just blindly follow other traders. So if you do that to start off, that's fine because you want to learn why people are doing what they're doing. But when you follow other traders, it's specifically that. You need to learn why they're doing what they're doing. Don't just wait for someone to tell you what to trade, when to get in, when to get out. Learn why they're doing what they're doing, and that's okay. And this is going to sound weird because as a flow trader, all I'm doing is following other traders. But there's a difference here between flow trading and someone saying in a Discord group, hey, you guys should trade XYZ right now, and we're going to get out right here, because their exit might be different than your trade style. And remember, their risk tolerance and account balance might be able to handle certain trades that yours can't. So you don't want to blindly follow other traders. And you can tell in the chat room, people that do that, and I can sense in the chat room, just reading the comments, I can sense the anxiety that they have when they're in a trade that they probably shouldn't be in because it doesn't match their trade style. 13 is an important one. Understand you won't always be right. This is another one I learned from Maria. Again, she's an amazing trader. I look up to her immensely. I've learned a lot from her. This is one that she says all the time. Understand that you won't always be right. So there's a saying in the trading world, it's okay to be wrong. It isn't okay to stay wrong. So if you're in a trade that's going against you, it's okay that you misread the chart. Or it's okay that you're in a trade that's going good and then a headline comes out and the stock tanks. Or a politician or someone is on TV saying something that turns the market. It's okay to be wrong. It's not okay to stay wrong. So when you're in these trades, if they're going against you, it's okay to cut a trade. It doesn't make you a bad trader. It doesn't make you a bad person. You have to understand that in trading, you won't always be right. And that's okay. We have a very good success rate with flow trading, but guess what? Some of them just don't work out, and that's okay. It doesn't make you a bad person. Next one, you're never stuck in a trade. So there's two things with this one I hear all the time is one, the main thing is PDT. Well, I'm under 25,000, I'm out of day trade, so I'm stuck in a trade. And to me, that's the biggest BS you can ever say. One, you're never stuck in a trade. Even if you're under PDT restrictions and you're quote unquote out of day trades, you can still close the trade. You might be restricted with your account, but you can still actually technically close the trade. You're never stuck. And what I really hate is, oh, I'm down 50%, I can't get out of it now. Well, if you're down 50% on a trade, if it's a bad trade, you might need to get out of it. You're never stuck in a trade. As far as PDT, this is kind of I'll go off on a random tangent here. If you guys are in $25,000 or less of an account, you can go to a cash account, no margin, and you're not restricted by PDT restrictions. 25,000 or less, cash account, no margin, you do not have those 3-day trade per 5 rolling day period restrictions. Now, you can only trade the amount of your account. So if you have a $10,000 account, you can trade 10 $1,000 trades, but you can't trade 20 $1,000 trades, because if you're doing that, that's a function of margin. So if you're in a cash account under 25, you don't have to say I'm out of day trades. Every trade you enter, you can get out of. And the other thing is, if you are restricted by PDT and for some reason you refuse to get out of that situation, you shouldn't be opening a trade that you know you can't get out of. The worst is when someone opens a trade for Tesla or Amazon and they say, oh man, I hope this momentum continues tomorrow because I can't close the trade. Well, Tesla and Amazon are volatile tickers. So if you're in one of those trades and you're hoping the momentum continues the next day because you're quote unquote stuck in a trade, your account can go from double to half immediately overnight. So just keep in mind, you're never stuck in a trade. Don't ever let me hear you say, oh, I can't get out of this trade, I have to stay in it. Even under PDT, you can close a trade. And if you're down a certain percentage where you're just gonna hold on to it, you're not stuck in it, you're choosing to stay in it. Only 2 more of these, and then I'm going to give you the location where you can download this so you can read them all in detail. 16, only losers average losers. That's a little saying I've heard a while back. Averaging down does not work. Now, yes, I know it will work from time to time. I know why people do it. But as a strategy, averaging down is not a good strategy. And the reason for that is if you're in a losing position, the trade you're in is going against you. Why do you want more of that trade? And I know the reasoning, people will say, well, I want to be able to get out of this trade quicker by making my cost basis lower. I know why we do it, but as a strategy, averaging down does not work in the long run. And if you get some great gains or get out of a losing trade quicker because you average down, that might tend to make you say, you know what, I'm going to keep doing that because it worked the last time. In the long run, averaging down doesn't work. Now, this is different from averaging in. There's a difference. Averaging down says, I want to risk $1,000, so I bought $1,000 worth of a position. It dropped on me, so I'm going to do another $1,000 to lower my cost basis. If your max risk was $1,000, you now have $2,000 exposed. That's not good trading practices. Averaging in is different. Averaging in says, I want a $1,000 position, but I'm only going to buy $500 right now. When it drops, I'm going to buy another $500. That's okay, that's acceptable because you're saying your max risk is $1,000, but you only bought 500. So when it drops, you can buy another 500 at a lower price. Now you have $1,000 exposed, which is your maximum risk tolerance. If your maximum risk tolerance is $1,000 and it drops and you add another $1,000, you doubled your risk exposure. So there's a difference between averaging down and saying, I want $1,000 here, but I'm only going to buy 500 for now. And if it drops, then I'll get another 500. So those are 2 different concepts. In general, if you're in a losing trade and you double your position size just to lower your cost, that's typically just a losing, in the long run, a losing strategy. You guys don't want to do that. And the other one I see a lot is don't short something just because it has run. I see this in the chat room all the time. Oh my God, this is up 6 points today. What should we, is everyone getting puts? When should I get puts? Is it okay to short this? If something's running, it's running for a reason. You don't want to short that. You don't want to get in front of a freight train. Oh my God, it just made all-time high. Should we short this? No. Why? It just made an all-time high for a reason. Why are you going to enter a put position or short something that just went on to make an all-time high? Now, there is a strategy that works like that, but you have to know the nuances of it. You don't just short something because it's running hard. You want to wait for exhaustion. And when there's a reason that the chart says it might be okay to short, you can do that. But in the chat room, almost on a weekly basis, not every day, but on a weekly basis, someone will say, this has run so hard, should I short it? And my suggestion to them would be like, do you see something in the chart that says you should, or do you just want to short because it's run so hard? And they say, well, no, it's running so hard, it's got to come back down. And then I get frequently the messages that say, oh man, thank you for telling me not to short that. It didn't come back down. I would have lost a lot of money. Now, in the chat room, I never tell people what to do. And if you're asking questions in the chat room, you should never let someone tell you what to do also. What I do in the chat room is someone says, what do you think of this chart? I'll say what I think of the chart. It doesn't mean you should do something. It's just my interpretation of a chart. I'm in this trade and it's down this percentage. What would you do? Well, I can give you my interpretation of what I would do. That doesn't mean that's what you should do. So when I say don't short something just because it's run, I'm not telling someone don't do something. I'm saying best practices, this isn't a good time to short something. Statistically or historically, that's not why you short something. But if you want to, by all means, it's your money in your account, you can do that. The other thing is, and this isn't on the list, but I'm going to talk about this now. We get a lot of times, oh man, I exited that trade at $4 and now it's $7. Oh man, right? How many of you guys have done that? Oh my God, I could have made $1,000, but I only made 300. The answers coming in are yes, a few of you guys have done that. Here's the thing, don't look back at a closed trade. It doesn't help you. It's not your trade anymore. Once you close the trade, it's not your trade anymore. So looking back at it, that doesn't help you in any way. Dylan says, if the answer isn't yes, you're all lying. I agree with that. And listen, I've done it from time to time too. I might be on a chart that I exited a trade for and I don't leave the chart. So, 15 minutes later, if I'm back on that chart, I just happen to see where it is and I know where I exited. But the thing is, looking back on a trade saying I could have done this, I should have done that, it doesn't help you. I'm actually going to get off this screen. I'm going to show you guys where you can download this while I keep talking about it. Go to tradetalkmedia.com. Now, I haven't updated this site. So if you're looking at the trade section, those aren't updated. But go to tradetalkmedia.com and right here, your free copy of 22 tips for trading success. Click on that and that will be emailed out to you. So tradetalkmedia.com, click on that, and the list I'm talking about now, that's where that will be sent out to you. So going back to a trade that you closed, once you close the trade, it's not your trade anymore. So whatever it does, doesn't matter. If I close a trade at $5 and someone says, oh man, it's $7 now, shouldn't you have held it? No, I shouldn't have held it because there was something in the chart in the moment that told me I don't want to hold this trade, I'm going to close it. In the moment, I don't know what's going to happen in the future. So if I see something that tells me I should close this trade, I can't look back on it and then say an hour later, no, I shouldn't have closed it. There was something I saw in the chart that told me to close the trade. I'm going to close the trade. Looking back on it doesn't help me in any way. Now, I'm also going to say at the end of the day, if you journal your trades, you can go back and look at what you did to see if there's a way you can improve your exits. That's okay. And in fact, that's what you want to do. Every trade you take, you should be journaling to figure out how can I improve what I'm doing. What you don't want to do is go back and say, oh man, I should have done this. Oh, if only I held, I would have had 10,000 instead of 3,000. Stuff like that doesn't help you because in the moment, you only have the information that you have. You can't see the future. You have no idea what you should have done. So the only thing you can do is react to what information you have in front of you. The other thing I'm going to say before we move on to the actual flow specific portion of this is that there's always another trade. There's always another trade. I don't care how many trades you've missed, there's always going to be another trade. I don't know how many times when I started out, I thought I had to take every single trade that was a perfect setup. And when I didn't take it, I was mad at myself. Oh man, I just missed a perfect opportunity. And then the rest of the day would be ruined because I'd be sitting there mad at myself and I'd be missing more trades. And then I'd get more mad because I'm like, oh my God, that was another one I should have taken. There's always another trade. So at this point, I'm disciplined enough that if I miss an entry, I don't care because there's always another trade. And that goes for flow too. If you miss a flow trade, that's okay. There's always going to be another trade. You don't have to be mad at missing anything. You don't have to be mad at, there was an entry, I saw it, but I didn't take it. You want to fix things like that, but you don't want to just sit there mad that you missed a specific trade. There's always another trade. And this was hard for me when I started out because I thought my job was to make every little penny that I could. And it would ruin the rest of my day because I was sitting there mad at myself for the whole day. There's always another trade. So if you miss something, don't worry about it. When we talk about the flow trades, when I talk about those high probability trades that we push out, on average, there's 2 to 3 of those a day. Now, some days we might have just 1 or 2. Some days we might have 6. Some days we might not have any. But on average, it works out to be about 2 to 3 per day. So if you missed a flow trade, that's okay. There's going to be more. There will always be more trades. Just this month alone, we've only had 6 trading days. There's always 21 alerts. 21 alerts in just 6 trading days. So if you missed 15 of them, guess what? You still grabbed a few. There's always another trade. Now, let's talk about some flow here for a second. I've got a specific trade pulled up here. Let's just go to the random black box screen. I'll pull up that trade in a bit. So let's talk about some flow. I want to talk about some best practices for flow because these are some of the questions I get in the flow class that I do address them, but I get them every single week. So I want to address them here in a bigger group in a different format. This goes with some of the rules I just spoke about before, is that we don't chase flow. Okay, so when I talked about don't force trades, wait for the right setup, we're not chasing anything that comes in here. And I'm not going to go over what this data means and how we interpret it. That's a class that I have on YouTube. You guys can go to 7-Star Traders on YouTube. In the search bar, type in 7-Star Traders and look for this one that says Understanding Options Flow. That Understanding Options Flow class is the actual flow class that I do weekly. It changes every week a little bit, but this is a good version of it right here that you guys can go and reference repeatedly. So I'm not going to go over what this data means or how we interpret it. That's a different class. So what I want to tell you guys though is we don't chase any of this, okay? If we're in a specific trade, this goes for you guys that might have missed the entry. Let's say we're in, this isn't a trade that we would follow. I'm just using it as an example because it's in front of me. This pen trade here, they were in at 187. Let's say we push this trade out and the flow says 187 and maybe we're in at 185, 184, 190, and you see, oh man, I missed that alert. It's now $1, well, $1.87 is where we got in. It's now $2.40. You don't have to chase that. Okay, so our entries are going to be very close to the flow that we call out, sometimes even better, because if you guys are waiting for something to alert or something to push through to the app, remember, we're watching this live, so we have a chance to get in before this stuff actually gets sent out. Now, sometimes I'm actually posting on social media and then going back to get my fill So you guys can get a better fill than me sometimes, but other times I'm seeing something and I go, ooh, that's a trade I need to get in. Boom, I'm in the trade, and then I'm going to go post it on social media. So you're always going to be a little bit behind. You shouldn't be too far behind. When we alert stuff to the app, I'm in these trades either the same price, a little bit better, or a little bit worse. Something on the app is never going to come out at $2 and you don't have a chance to get in until it's $2.80. That won't happen. They might randomly, if something just monster spike and takes off. But generally, if we alert something at $2, you have a chance to get in around $2 with us also. So if you miss something and you look at it and it's now $2.80, don't chase that. Some people will wait for a pullback, and that's okay if that's your style. What I can tell you is for Charlie and I, we trade very similar. The way Charlie and I trade is the second we recognize it's good flow, we're in the trade. We don't look at the chart. We don't look up the news. We don't look up the Greeks or the IV. We ignore all that. The second we recognize good flow, we're in the trade. Some people want to look at the chart and then wait for a good time on the chart to coordinate that trade, and that's okay if that's your style. I'm not going to tell you that's wrong, because if that's how you trade, that's how you trade. And if you're comfortable and successful with that, no one can tell you to do something differently. But what I can tell you is that we're not going to chase. We're not going to wait for a pullback. The second we recognize it's good flow, we're in the trade with them. Some of you might want to wait for a pullback, and that's okay. I'm not going to yell at you if that's your trade style. Remember, we all have to find what works for us. So we might be in at $2, and you might look at a chart and say, wow, I think I can get in a little bit less. Maybe it pulls back and you get in at $1.75. That's okay. But what I'm going to tell you guys is the way Charlie and I trade is the second we recognize good flow, we're in the trade immediately. We don't have to do any research with it. The other question I get, this one comes up quite a bit. We're in a trade at, let's say, $6, and then 2 weeks went by and the trade is at $6.10. Someone will always say, hey, is it still okay to get into this trade? Now, you've got to use some reasoning and some common sense with this stuff. So let's talk about that for a second. We're in at $6. 2 weeks went by. The contracts are now sitting at about $6, $6.10, maybe $6.20. And someone's asking, is it still okay to get into this trade? Let's look at the common sense and the reasoning behind this. The big money that got into this trade, these are hedge funds, big money traders that are placing these trades. If they're in at $6 and 2 weeks went by and the contract is still $6 or $6.10, $6.20, do you think they're closing their position? Right? The hedge funds don't get into a trade, wait 2 weeks and sell it for a 10-cent profit. That's not how they trade. Now, it's possible they could, but it's just not likely. We've never seen them do that. That's not how they trade. So if we're in a trade at $6, 2 weeks went by and the contract is now $6.20, and you go, oh man, this pulled back about to the same entry as the big money. Is it still okay to get in? Of course it is. The big money is still in that trade. They're not closing it out for a 10-cent profit. If they're still in the trade and they still believe in the trade, there's no reason why you can't get into the trade at that point also. Now, for me personally, I actually don't do that. I don't like double dipping. I don't like in and out of trades necessarily. As a scalper, I love that, but as a flow trader, I take the trade once and I'm out of the trade and then I don't look at it again. But if I'm in at $6 and it rides up to $8 and I close the trade, and a week later it's back down at $6 and someone says, is it okay to get in the trade? Yes. If the big money is still in the trade and they rode it from 6 to 8 back to 6, if they didn't close the trade, then they obviously still believe in the trade. So it's okay for you to get in at that point and still ride with the big money. Again, I personally don't do that. If I ride it from 6 to 8, I close the trade. I don't look at the trade again. It's off my radar. I don't look at it anymore. But if you're following that trade and you say, oh man, it was 6 when you called it out, it's now $6.75, I'm not going to get in. Oh man, it ran all the way to 8, but now it's back down at 6. Yes, it's still okay to get in that trade if that's your trading style. Because again, the big money is still in the trade, so they still believe in the trade. The next thing I want to mention to you guys, Do not buy a contract, even if it's with the flow, you're following the flow. Do not buy a contract that's 4 months or 6 months out and watch it on a 1-minute chart. That doesn't make sense. The big money does not manage their trade on a 1-minute chart if they have a 6-month position. Do not enter a trade 4 months out, watch the 1-minute chart, see it drop 6% and freak out. Oh my God, we just got into the trade. It's down 4%. Are you guys holding? Of course we're holding. There's 4 months of time. 12 minutes has gone by and it's down 4%. We just don't care. We're not watching a 1-minute chart to manage a 4-month contract. The number of messages in the chat room that I get for that is unbelievable. And it tells me a few things. It tells me you guys oversized. You have a $5,000 account and you just put $4,600 into this one trade. It's down 4%. You're freaking out. If you're in a 6-month contract, do not watch a 1-minute chart and care about what's happening. That's not how you manage a trade. In fact, you're going to mismanage the trade by doing that. You're saying, oh my God, it's down 4%. It broke a support level. We got to close this trade. Well, what it's doing in 12 minutes has no impact on what it might do 4 months down the road. The big money doesn't enter a trade and freak out when it's down 4%. The next thing I want to talk about is kind of along the same lines. We get contracts that might be 4 months or 6 months out. And if you guys have questions on anything I'm talking about here, I know there's a few coming through that I'm not getting to during the segment I'm talking about it. We'll do a Q&A session at the end of this. So if you guys have questions that I'm skipping over, I will get to them. I promise. We'll do Q&A after all this is over. And this isn't going to be a 3-hour seminar. We're going to keep this relatively short here. So 6-month contracts, and people are looking to day trade them. Does that make sense to you guys? We buy a contract, and I know this part is boring because the screen isn't changing. It's just me talking. I apologize for that, but I'm going to get to the screen changing in a bit. Does it make sense, though, to buy a 6-month contract and expect to day trade it? And the answer is no. The big money does not buy 6 months of premium if they know they're going to close the trade in 2 days or 3 days. So we get people that say, oh man, there's 6 months of time on this. I want to day trade it. Should I enter this trade? And my answer is no. If you're looking to day trade it, you shouldn't enter a contract that you're paying 6 months of premium for. Now, here's the thing. Oftentimes we do get 4 months, 6 months, maybe 3 months, and we can close it the same day. That does happen. It actually happens. I wouldn't say it's rare. It happens not maybe frequently, but it happens enough. We have a 6-month contract, a 4-month contract, a 3-month contract, and 2 hours later, it's up maybe 40, 50%, and some people want to close it out. That's awesome when it happens. But if you're buying 6 months of premium, don't expect it to be a day trade. If you're buying 4 months of premium, expect to hold it 4 months. Now, it doesn't mean you're going to have to, and a lot of times you don't. I get out of all of these trades way before expiration, so you don't have to hold it 4 months if it expires in 4 months. But if it expires in 4 months, you can't expect it to move the same day. If it does move the same day and you want to close it, that's a bonus. But don't buy a 4-month contract expecting it to move the same day. The next thing I'm going to talk about is stop losses, and this is going to scare some of you guys. This goes against common practices for general trading. I'm talking specifically about flow trading, and I'm talking specifically about the trades we send to the app. This isn't just any flow trade that you say, you know what, that looks kind of good, I'm going to take it. I'm talking about the top tier flow, the best of the best. We don't use stop losses. Let me be a little more specific. Charlie and I do not use stop losses. When we see that top tier flow, the best of the best, we're going to enter the trade immediately upon recognizing it's the right flow to follow. And we are not going to put a stop loss in there. We're sizing the trade such that if it goes to 0, it doesn't hurt us. So sizing, position size, risk management is important. We're sizing these so that if it goes to 0, it doesn't hurt us. but we're not putting a stop loss on these. And I'm going to show you an example coming up of why we don't do that. And I'm going to give you the rule as to why we don't do that. Now there's a distinction here. When we send out spec flow, spec meaning speculative. When we send out spec flow, that is the exception. The top tier flow is that very high quality, high probability flow. Spec flow means speculative. It might work, it might not. For spec flow, and you have to look at let me change, if you guys focus on the screen now, I'm going to change the screen here. Let's look at one of these trades here. Here's a perfect example. Geo. So Geo was sent out to the phone. If you look at the description down at the bottom, it's size for a cheap stock. I will go small and call it spec. This is speculative flow. This is not the high probability flow. There's enough here that says this is a pretty good looking trade, but it's not one of those trades we're going to enter with a large position and we're going to let it run to zero. When it says spec, and Charlie specifically says, I will go small and call it spec. This type of flow, you need a stop loss. You need to pay attention to flow like that. So when I say we don't have a stop loss, I'm talking about the top tier flow, the best of the best. That stuff, and again, you might want to trade differently because your account and risk tolerance is different than mine. It's different than Charlie's, it's different from Maria's, it's different from Kang's, from Swan, from Bender. We all have different risk tolerance and different trade styles. So this might not work for you, but I'm going to explain why it works for us. And we don't use stop losses on that best of the best flow. Okay, so let's get into that for a little bit. The reason this works is because the big money, they're putting their clients' money into these trades. And I'm not talking the $30,000 trade, the $40,000 trade. I'm talking about the millions of dollars. When they put on a $6 million trade, their job is to make money for their clients. These hedge funds don't stay in business if they lose their clients' money. So if they put on a $6 million trade, they are fairly confident that they're going to make money for their clients. We are going to follow their lead. Now remember, we don't know why they're putting on these trades. We don't have any reasoning for why they're doing it. We just see what they're doing. So we don't know why they wanted 4 months of time. We don't know why they wanted that strike price. Since we don't know that, all we're going to do is follow exactly what they do. Okay? People ask all the time, well, when you follow flow, what contracts do you take? We just take the exact same contracts that the flow shows us. The reason for that is we don't know what the hedge funds are doing. But let me rephrase that. We know what they're doing. We don't know why they're doing it. Since we don't know why, we're just going to follow their lead. Because of that, if they're down 40% and they don't exit the trade, we are not going to exit the trade either. If they're down 60% and they don't exit the trade, we don't exit the trade either. Now remember, you might want different rules for the way you trade. This is just, I'm telling you the best practices based on what we've seen with the stats of this flow. The way Charlie trades, the way I trade, we trade pretty much identical for all the flow. There might be a trade that he takes that I don't. There might be a trade I take that he doesn't, but 99.9% of what we're trading, it's the same flow at the same time because he taught me how to do this, so it makes sense that I'm going to trade the same way. But we've also spent time on the phone going over it and trying to dissect it and figure out exactly what we're looking for and how to improve it. So we trade the exact same way. So we have a rule that states if the big money is still in the trade, we stay in it with them if it's a red trade. Now, if it's a green trade, you take your profits depending on your exit method. So if you like to scalp or day trade or swing trade, your exits are going to be different from each other because your trade style is different. So when I say we exit only when the big money exits, I'm talking about if the trade is red and goes against us. The number of times that has happened, you can count on one hand. When we talk about this top tier flow, it just doesn't fail often. Now, you have to size such that if it does drop, it doesn't destroy your account. The example I like to use here is we had flow for Netflix one day. Over a course of 2 days, I think it was $40 million of flow. It was the best we've seen in the history of Blackbox. And that flow never made a profit. We had people looking at our trades going, oh, wow, they've made so much money, like trade after trade after trade. And I just watched it all. The next one they call out, I'm going to get in. The next one we called out was Netflix. A lot of people put their entire account into it, and that trade never made a profit. So you have to size these accordingly so that if it does go to zero, it doesn't hurt you. So Charlie and I have this rule that if the big money is in it and the trade is red, we stay in it with them. And the example I'm going to show you in a chart coming up will show you pretty much how that works out. But remember, if we're talking about speculative flow, you need to manage that more carefully. You do want to stop for that one. Let's make this a little more fun so you're not staring at the same boring screen. Let me pull some statistics in here for you. These are all the trades that have been sent to the phone since the app launched. The app launched on June 22nd. Since the app launched on June 22nd, I'm gonna have to move this over so you can see the statistics here. We sent 172 trades out to the phone. Out of those 172, 168 of them made a profit. 172 trades sent to the phone, 168 made a profit for 98% of what we sent to the phone generating a profit. That number is unbelievable. If I didn't have these on a spreadsheet in front of me, I wouldn't believe it either. I challenge you guys to find any trader or system on the planet that will give you a 98% success rate. Now here's the thing, this is Excel, so it considers a profitable trade any trade that made a penny or more. So maximum gain, this trade right here made a 6% maximum gain. Let's be honest, we're not trading for 6% gains. We're not trading for 8% gains. So while this is the number here, 168 out of 172 generated a profit, that's including these 6% gains, a 3% gain. Charlie and I don't really believe in that. Anything less than 10%, we're going to consider that a loss. Because let's be realistic, if you're in a trade and it's up 10%, are you closing that trade? If you're a scalper, maybe. But if you're following flow, you're not closing that trade for a 10% gain. So we're going to remove everything that's 10% gain or less and consider that a loss. This number of 98% drops to about 85%. I still challenge you guys to find a group that's going to send out trade alerts where 85% of them generate a profit of 10% or more. Now, I was actually running the numbers just to see. I've got to move this over. Here's the actual number. So if we consider 10% or less a loss, 148 out of those 172 trades generated 10% or more. That's 86% of what we send out. I lied when I said 85. It's 86%. Now, we don't really want 10% gains either, right? So out of the ones that made a 30% gain or more, 69% of the trades that we sent to the app are generating 30% or more. 69% of the trades that get sent directly to the app generate a profit of 30% or more. If you want a profit of over 50%, 56% of the trades we sent to the app did that. So think about that. Over half of the trades that make it to the phone app are giving you a 50% or greater profit. Those are insane numbers. 34% of the trades that hit the app made a profit of over 100%. So let's look at this maximum gain column right here. These are the ones that we just put out this week, so they didn't have a lot of time on them to generate income. but they don't expire for months. So we'll skip some of those, even though some of them are 84, 43, 263% max gains already. So when I say these are generating profits, look at these numbers here. 69, 30, 85, 92, 11, 4, 15, 16, 58, 58, 70, 71, 37. These are decent gains. Look at this stretch right here, 181, 471, 510, 120, 195, 335, 218, 365, 57, 60, 33. These are not small gains. 347, 208, 72, 77. There's a 4% in there. These are not small gains. So when we say the trades we send to the phone are high probability, that's what we're sending to the phone. There's a really good chance that these trades are going to make a profit. That goes back to the other thing I said about we don't force trades. If we were forcing trades just to say that we sent 40 trades to the phone this week, that number would be nowhere near the success rate. The reason it's so successful is because we're very specific about what we're going to trade. Now I'm going to go back to this specific example I started the seminar with. SEAS, S-E-A-S. This was the flow on 8/27. We saw flow for 53, 94, 138, 209, 89, 107, and then $1.04 million. When we see flow like this, this got us into the trade. If we weren't in the trade here at this 209, 138, 107, the second that $1 million sweep comes through, we're in this trade immediately. This trade came through at $3.30. Okay, so this was 8/27, SEAS. This was a 10/8 contract for $51 calls. This contract expired yesterday. Okay, so the second we saw that $1 million sweep, we were in this exact same contract, SEAS. Now, if you look at the flow afterwards, I'm on historical that leads up to yesterday. The only other time they touched this contract was on 9/30 for 231. Now, the number of contracts they opened here was 5,621. This is a block trade, so we don't know if this is opened or closed. Let's just assume these were closed. I don't know if they're open or closed, but we're going to assume it just for the sake of the argument here that these were closed. Well, they closed 231 contracts out of 5,621. Okay, so even if those were closed, it doesn't impact all the buying they did here. So what this shows you is that when they entered this particular trade, they never closed out this trade. So the other thing is people say, well, when the big money exits, how come you don't alert that? Well, on this particular trade, we couldn't alert it because they never exited the trade. And these contracts expired yesterday. So what does that tell you guys? It tells you they took possession of these shares. These expired in the money, so they took possession of these shares. Now to show you guys yesterday, this is October 8th, this is the SEAS, this is the contract, the $51. The volume yesterday was 2, the open interest was 6,000. So this again shows that the open interest yesterday was still 6,000. The only volume for the entire day was 2. These 6,000 contracts were not closed out. So when you guys want an alert for the big money exiting, it doesn't always work because in this case, they never exited. They exercised all 6,000 of those contracts. And the flow shows you that there's no exit there. Now I want to pull up the actual chart for that specific trade. This is that specific contract. If you look up top here, this is the SEAS, the 8/21 $51 or October 8th $51 calls. So this is the chart for the options contract, not the underlying. You can see down here in the corner, if you look at this volume where it says 78, watch that volume when I hover over this candle here. The volume was 6,156. That's where we saw the flow come in. And they were paying low $3 for this contract. Low $3 entry for 6,000 contracts, it hit a low of $1.30. That was more than a 50% loss. And some people are saying, well, at a 50% loss, I have to cut this trade, or I only give my stop losses 30%. Well, if you did that, you would have been stopped out of this trade somewhere down here at $1, $2, wherever you stopped out, depending on your percentage or dollar amount loss that you have. After it hit a low of $1.30, it closed, or it didn't close, it closed at 8, but it hit a high of $9.50 yesterday. They were in at $3. It dropped to $1.30. That's more than a 50% loss. But if you look at the volume down here, the big money never exited. So they have 6,000 contracts with a 50% loss. They did not close out those contracts, meaning they still believe in the trade. Those went from $1.30 to $9.50. Now remember, they weren't in at $1.30. They were in up here at $3, but they rode it from $3 to $1.30, then up to $9.50. So when we say if the trade is red, as long as the big money stays in it, we stay in it with them, this is a perfect example of that. We took over 50% of a loss, but if we stayed in the trade, it went on to make a monster gain. Now here's the thing, it's not always going to work out like this. Okay, there's a chance where something's in at $3, it drops to $1.30 like this, but let's say it drops to $1 and then 80 cents and then 60 cents and they close out the trade for a loss. If you put your entire account balance into this one trade because we said high probability trade, and you're tired of not taking the trade, so you put your entire account into the next one, if this didn't do what it did, and it keeps dropping and they close the trade, you just blew up your account. So trade management is vital. Flow will get you into the trade you need to be in, but if you don't manage it correctly, you will still lose money. I won't say you will lose money, I say you can lose money, because you can get into a lot of these trades and just make a little bit here and there. You can make 30%, 60%. A lot of these trades do very well. But without proper trade management, we've seen something like this where the trade is in at $3. And let's say it goes up here to $6. And then it drops to 80 cents. And someone says, oh man, flow doesn't work. I was in at $3. It's now 80 cents. This doesn't work. Well, if it was alerted at $3 and it went to $6, you had 100% gain. If you didn't take gains anywhere along that path and then let that trade go red, that's not a flow trade issue, that's a trade management issue. So you still need proper trade management. You need to position size, you need to find a way to take profits, you need to make sure that if you're up 100%, that trade never goes red on you. So our rule for exiting, if the trade is red, if the big money stays in it, we stay in it with them. We are position sized such that if it doesn't turn around, it's still not going to destroy our accounts. It sucks to lose money, but it happens as traders. We're going to lose money. With the system that we use and the rules we have in place, it doesn't happen often. So when it does happen, we just don't care. We're not concerned about a trade moving against us. Now, again, this isn't for speculative flow. This isn't for flow that looks good, but it's not great. I'm talking about the best of the best, the top tier flow. And that's the stuff that gets sent to the app. So if you guys don't have the app, go to Apple Store, go to, I don't have an Android, so whatever Google Store is where they have all the apps listed, go there, type in Black Box Stocks, it should be one word, and download that app. When you download that app, look under the flow play section. Those are the trades I'm talking about when I give you the statistics. 86% generate a profit of 10% or more. That is the flow play section. You can turn on alerts for the flow play section and have them specifically sent to your phone. But this is an example of if the big money is still in the trade, when it's a loss, we stay in it with them and they got paid big time. Now, a common question is, how do we know if the big money is still in the trade? There's two ways we know. There's actually three ways. I'm showing you one right now. If you pull up the chart for the specific options contract, you can see the volume down here. So this bar right here shows you 61.56 in volume. We know that was an opening trade. And if you look at the volume, the whole rest of the contract, it never approaches that. So you know that these 6,156 contracts, most of them are still in the trade. You can see there's volume throughout the weeks afterwards, but it's 2, 5, 13, 35, 1, 6. So they might be closing out some of them. But you can see the volume here, 6,156, and there's nothing anywhere close to it on the chart. So we know that they're still in the trade. The other thing is I'm watching the flow live. So when I see the flow live, I see this much flow being entered. If they enter it that much where it's going to show up on the scanner, we're going to see the exit on the scanner. The only way the exit wouldn't show up on the scanner is if they close 10 contracts at a time. And they're not going to do that. That's not how the big money trades. The only way we wouldn't see the exit on the scanner is if they closed it in such small increments that the algorithm won't even pick up that the trading exists. And the way Black Box works is we actually have every single trade from the exchange. So we would see every single 5 or 10 contract trade. It just won't show up on the scanner. So the scanner right here is showing me that there was 0 exit on this contract. The other thing you can do is check the OI the next day. Now the problem with that is OI only updates once a day at the beginning of the day. So let's say they were going to exit this trade yesterday. Remember, these contracts expired yesterday. This is the 10/8 contract, so it expired yesterday. If they exited this trade yesterday and you're waiting to see the OI tomorrow, that doesn't help you, because you don't have a chance to exit this contract. Now, we're going to see it in the live flow when they exit, and we're going to see it the second they actually exit. So I like watching the live flow. If for some reason you don't have the flow in front of you, you can always check the OI the next day to verify it. So you can look at the chart. The volume on the chart will show you the activity for the specific contract. You can look at the live flow, which I like the best. So when I show you the contract for the actual, or the chart for the actual contract, I've never looked at this in my life. Now, when I'm doing research like this, I do look at the actual contract. When I'm trading, I have never in my life pulled up the actual contract chart. I don't look at that. It's just not a way that I trade. Most people I know have never done that in their life. So when I'm talking about the specific chart for the contract, some people will. I know of a few that do, but it's very rare that you'll find someone that trades off of the chart for the contract. So if you're looking at the volume here, that's one way to do it, but most people don't do that. I'm going to be looking at the flow live. And again, I am a full-time trader. I do this from bell to bell, so I'm going to see the exit in the flow. If you work and you can't see the flow throughout the day, you might have to check the OI. Or after hours when you get off work, you can pull up, I'm on historical down here, so you can pull up the historical information and look for it that way. The problem with checking the OI the next day is if the big money exited, you can't exit until the next day. And if it gaps down, you have no chance of getting out of that contract before the gap down. So I like to watch the live flow to see the exit. Again, if there's this much flow that shows us getting into it, we're going to see enough flow for the exit as well. Now, there's one other thing I want to talk about, and then I'll give you guys a chance to ask some questions. The only thing I want to talk about left is, I said this before, there's always another trade, right? There's always going to be another trade. So if you miss something or skip something or don't see something, don't worry about it. The other thing I want you guys to notice, if you have a $1,000 account and we alert a trade for $600, you don't want to buy that. Now, we can say it's high probability, and it is if we push it to the app, but remember 86% of these trades work, meaning 14% don't. So if you put $600 of a $1,000 account into a single trade, and that happens to be one of the 14% of the trades that don't work out, you're missing a significant portion of your account. So again, trade management is very important. So if you have a $2,500 account and we call out an $800 trade, you might want to skip that one just for risk management purposes. If a trade is too expensive, you want to skip it. There's always going to be another one. What I don't want you guys to do is, let's say we call out a trade for 3 months of time for a $100 strike, and you say, oh man, I can't afford a $600 contract, so I'm going to save the 3 months of time, but instead of the $100 strike, I'm going to buy the $130 strike. Do not do that. Now again, you can if you want to, it's your account and your money. So when I say do not do that, I'm talking about best practices. Best practices for flow trading is to not say, I can't afford the $100 contract, so I'm going to buy the $130 contract. Do not do that for best practices. Now you can do that and it might work. In general, you're going to get destroyed by doing that. It's going to work a few times. But in general, if you can't afford a $100 contract, so you go to $130 because they're cheaper contracts, in general, that's just not going to work. So skip the trade if you can't afford that one for your account balance. That's okay. There's always going to be another trade. We do find trades that are $300, $200, $400. So if you can't afford a $1,200 contract, an $1,800 contract, that's fine. We're still going to find trades for you guys. Some of them are expensive. We do have some $1,800 contracts. But if you can't afford that, that's okay. I don't want you guys putting the majority of your account into one trade, hoping that's one of the ones that works out. Just best practices, that's not a good way to do this. And that's about all that I have. So at this point, I'm going to open the floor for questions from you guys. If you've asked a question that I didn't answer, go ahead and type it again. Sometimes these questions come through pretty quick and I will miss a bunch. So I'm going to just pick a random point here where I can start something. One of them says, I thought when there's bid, it means selling. So here's a common misconception, and I can use the C's example because that's what's on the screen right here. This bid side trade is not selling. This is the same buyer opening a position. The spread was moving quick enough, or it just happened to fill at 3.3 when 3.3 became the bid. Even though this is bid side, this isn't closing a position. This is opening the position. Now, since I'm on historical, it doesn't show the time. Let me go to the real timestamps here. You can see that it records the time to, it's 12:58:25. So it has the seconds on there. So to the second, we know when these trades take place. On historical, it doesn't show that, it just shows the date. But if we were looking at this on the specific day that these came out, and in fact, I can actually, let me see if I can do that. These were on 8/27. I'm gonna have to scroll back a little bit. Actually, I'm gonna have to scroll back a lot. Let's see if we can find it real quick. So the timestamp is what gives it away. Even though that filled on the bid, that's actually an opening transaction. And in the class, I teach the rules and the exceptions. So the rule is that bid side flow is typically a closing position. It can also be a written position. Here we go. This is the one I'm looking for. So the rule is that bid side flow is closing or writing, but there's an exception. And the exception is that sometimes it's an opening order. The bid-ask spread is just moving around quick enough that it happened to fill on the bid, even though it's an opening position. So here's the $1.04 million. Let me pull this up. This was sent out live. So when it was sent out live, it has the timestamps here. You can see the timestamps are 12/23, 12/24, 26, 27, 28, 29, 29. So what they're not doing, this filled on the bid. What they're not doing is buying, 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 closing 2 minutes or a minute or 30 seconds after they bought it. So the timestamp here, even though this filled on the bid, the timestamp gives it away that this is all the same buyer driving this sale here. Buy, 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 buy. Even though that's bid side, this is a buy. Now, some of the competing scanners out there will actually label this as a sell. And we've had problems with that. We talk to them all the time and say, hey, you guys are putting out bad information to your customers, and they don't seem to care. They like the fact that they can label their sells and buys, but they're actually labeling them wrong. So the competition would tell you that they closed out the position right here. Black box won't label this a buy or sell because we can look at this and we know for a fact that this was an opening transaction, and the OI in the chart proves that. So the rule states bid side can be a closing transaction or a writing transaction. The exception is that sometimes that's just not the case, and this is one of those exceptions there. Give me a second as I scroll through some of these to find some more questions. How do we see if the big money is exiting? Again, you're going to see it in the flow. If there's enough flow to enter, there's enough flow to exit. The only way an exit wouldn't show up is if they closed it in such small increments that the algorithm isn't picking it up. And again, the algorithm actually does pick it up, it just won't show it on the scanner because we don't want to see when people are trading 5 contracts. There'd be so much flow that it would be impossible to find. I do have a graphic I can show you guys. Here we go. This is from the actual flow class. And this might be pretty hard for you guys to see. But if you can see this, this is all ask side activity down here. And all the ask side activity the next day turns into bid side activity. So if you see ask, bid, ask, that one bid side isn't closing. When you see all of this ask side activity turning into all bid side activity, that's what it's going to look like when the buyer exits the position. So we're going to be able to see this stuff live from the flow. How do you know TP? Are you talking about target price, 10% or 50%? We don't. If we could see the future, trading would be awesome, but we have no idea. We don't set target prices, we just watch the charts. How do you pull up a chart on the specific contract? You can go to your options chain and type in the specific symbol for, if you're on Thinkorswim, you can go to this button here, click on options over here, and when you type in a ticker, I'm going to leave it on C's just so I don't mess up this particular chart. It'll pull up the options chain for the specific contract. You can choose which strike and expiration. And when you do that, this now becomes, let's get that line off there. This becomes the chart for the specific contract. So there's a symbol for the specific contract itself. If you know how to type in the symbol, you can do that on other trading platforms as well. Thinkorswim just makes it really easy. I actually don't trade on Thinkorswim anymore because I don't like their fill prices, but from time to time, I'll still chart with them. What about doing a vertical debit spread? So some people will do that to limit their risk or lower their cost, or et cetera, et cetera. I don't do that. I don't trade those. When I see the right flow, I'm entering exactly the way the big money entered. But I do know there are some people that will try to lower the cost by doing stuff like that. It's not the way I trade, so I can't go into detail about the ins and outs of that, but I do know some people will do that. Does BBS have a specific TOS chart study that most are using? Everyone trades based on their own criteria, so there's no real standard the way we chart. Can you explain below bid and above the ask? So that's in a Thursday night class that I do on a weekly class. So I'm actually not going to go into detail on that now. Above the ask is an aggressive opening. Below the bid is an aggressive closing. As far as more detail on that though, again, if you guys go to 7-Star Traders on YouTube, scroll down until you see this one, Understanding Options Flow. I do go into detail there about the spread, the bid ask, the above ask, below bid, all that stuff. Do you guys alert again if alerted flow can be re-entered? No, we're typically not going to do that. We might in the chat room, but it's not going to go out necessarily on the app. I think it has once or twice, so it's possible, but as a repeated strategy, I don't know if those are going to make it to the app a lot. Same expiration, but a smaller strike. So the only time we change flow and we don't do this often, is if they buy 4 months of time for a strike that's $20 out of the money, we might keep the same 4 months of time, but only go $10 out of the money. That's the only time we'll change the flow, and we don't do that too often. So for the most part, I tell people when they ask what contract to trade, just stick with the exact same flow. They're buying that time and that strike for a reason. We don't know the reason, so we're just going to follow them. The only time we'll change it is if we like the flow, but it's a little too far out of the money, we'll keep the same amount of time and go with a closer strike. But the amount of times we do that is still kind of rare. What if the flow play OI drops 35%? Do you reduce in the same way as the hedge funds? I don't. I might look at that and it might impact the way I'm going to manage the trade, but for the most part, we don't really see that too often. It might have happened a few times, but for the most part, once they enter these trades, they're either going to profit or exercise the trades. We don't see them kind of reducing the position size too much. I know it has happened a few times, so I won't say it doesn't happen. I know it has, but for the most part, we don't see that too often. Harry, thank you for the compliments. I appreciate that. Thank you for those kind words there. How do you monitor the price movement of an option and decide when to exit? That's based on support and resistance. If you guys are not comfortable with support and resistance, again, you can go to YouTube, type in 7-star traders. This one you'll have to scroll down a little bit more, but look for this green title box, support and resistance. That's a live class I did for Black Box members about 1.5 years ago. It is 4.5 hours long, so make that a weekend journey for you guys. Maybe split it up, but that covers literally everything that I use for support and resistance. And it says trading basics on the title, but if you understand this video, and if you understand this understanding options flow video, those 2 videos are exactly how I trade. So everything that I use for my full-time trading is just those 2 videos. Now, I know them a little more in depth than what goes into those 2 videos because I've been doing this for 6 years full-time. But the basics of those 2 videos is everything that I use for full-time trading. So if you understand those 2 videos, you've got the tools you need to really start understanding how we do this on a day-to-day basis. Do you do any technical analysis when following flow? Good question. To enter the trade, no. And if you guys follow me on social media, you'll know I'm big on technical analysis. I love technical analysis. But when we find the right flow trade, we don't use it to enter the trade. Once I'm in the trade, I'll pull it up and look at where we are on the chart to see what we might be looking at for resistance levels. But as far as this trade right here, when we see this kind of flow and this $1 million sweep comes in, we're in that trade immediately. We don't even look at a chart. And the reason for that is the big money just exposed $2 million of their money to this particular contract. If the chart was so bad that they weren't going to make money on this, they wouldn't have chosen that point in time to open their trade. So if that point in time is good enough for them to expose $2 million of their clients' money, it's good enough for me to expose my personal money as well. So we don't look at a chart before we enter these trades. How do you personally take gains in the flow trading? I personally take gains way too quickly, so don't ever follow me out of a trade. That I learned last night when I was doing the statistics on, I update the statistics, and I was doing them last night and realized that I'm actually not doing nearly what I should be with these contracts. And again, that goes to being a short-term mindset. I'm a scalper and a day trader at heart, so I'm looking for those immediate short-term gains. And doing the statistics last night, I realized I'm leaving a lot of money on the table by doing the shorter term exits. So the next phase for me on flow trading, we've got entries dialed in damn near flawlessly. We can get you into some amazing trades, but where to exit, that's still up in the air because a lot of people, and it's not just me, it's a lot of people are just taking gains on these. 30% is great, 60% is great, but if it goes on to make 400%, we're looking at it going, how could we have held this longer? So we've got the entries dialed in. I'm going to put us against any options trader on the entire planet. Our record speaks for itself. Now the exits are what the next phase is. I'm going to be studying this data and going through the charts and trying to figure out how to best maximize the exits on these trades, because that I feel I have a ton of room for improvement. So how do I personally take gains? Way too quick. That's my answer there. But it is based on support and resistance. I'm just using a shorter time frame for support and resistance rather than letting the trades play out the way the big money does. Any advice on where to start taking profits? That's hard because, again, different traders are going to have different mindset. So as a day trader or a scalper, you're going to take profits. Maybe you take 10, 15, 20%. But as a swing trader, you want that 50 or 60%. So when you're just starting out, it's fun to make profits, right? So if you're just starting out and you're making 25% gains constantly, lock those in. Feel good about it. Build that confidence that you're entering the right trades. And then once you start growing the account and building that confidence, you want to start looking at those support and resistance levels and seeing the live price action. Where is this finding some resistance? But again, it goes back to one of those tips I gave you guys. If you have a 6-month contract, you don't want to look at support and resistance on a 1-minute chart. So that comes into play with experience of finding your trade style, finding your comfort level with exiting, with support and resistance, etc. So that's just one of those things where the more experience you have, the better you'll be at that. And I've been trading full time for 6 years now, and I'm not just realizing, I knew this all along, but my trade style of being a short-term trader works in some environments, but when I'm following flow, I can't have a short-term mentality with the flow. The big money is not in this for short term. So while I've been doing some great gains and some great returns, and my percentage of success with these trades is very high, I am not doing anywhere near what I could be doing by holding these longer. So as far as that goes, it's just the more experience you have and the more you find your trade style, you'll find your voice in trading. And when you find that, that's going to determine how you exit these trades. And I'm actually at this point, after the statistics last night, I'm going to go through and try to figure out how I can update the way I exit some of these flow trades. I'm still a scalper and a day trader, and that's great for charts. But when it comes to the flow trades, I want to change my exit strategy a little bit more and refine that to get better results personally. So there's always room for improvement. Never stop looking at how you can do better. What broker do you use for better fills? I use TradeStation, and Charlie uses E-Trade, and both of us have great fills on market orders, so neither one of us would complain about either one of those brokerages. Spec flow, we should actually watch the chart. Yes, so spec flow is speculative, meaning it could do really well or it could just completely bomb. So if something goes out as spec flow, you definitely want to watch that a lot more carefully. Do you use the stock chart or the options chart when determining support and resistance? That's always the stock. Like I said, I never use the options chart unless I'm trying to show a specific example like I did today. Otherwise, I'll never pull up an options chart when trading. The options pricing is based on the price and movement of the underlying. So the only thing I watch is the actual chart of the underlying. Is the spreadsheet viewable? Yes. If you go to Discord, look under the 20 trades room, and the spreadsheet is posted there. I actually haven't posted this week's update yet, but 2 weeks ago was updated. It's in there. So again, actually, this is a good point. If you guys are not members of Black Box, you don't have access to that Discord. If you go to 7-Star Mike on Twitter, at 7-Star Mike, this link here where it says staygreen.blackbox.com. If you guys are not members of Black Box and you want to join us, click on that link and that'll give you a 20% discount on your first month to try us out. I know there's a lot of you guys here from Twitter that might not be members. If you liked what you saw about some of those trades or just the rules we have as far as following these trades or the stats on that spreadsheet, if you click on this link, it'll give you that 20% discount for their first month. Come hang out with us, try us out. We are available in the chat room from bell to bell every day, so we're actually talking through all of this stuff live. If you are a member of Black Box, though, go to Discord, go to the 20 trades room, and you'll see that spreadsheet there. Have you seen certain times of day that deliver better flow? I get this question a lot, and the answer is no. The big money doesn't enter their trades based on a time. They enter their trades based on when they feel fit to enter their trades. And whether it's morning or afternoon, that's not a criteria for them to enter a trade. So we see flow first thing in the morning. We see flow right at the bell. We see flow at lunchtime when everyone else is kind of quiet. There's no time of day or specific day of the week where we can sit and watch for better flow. It just happens whenever it happens. So if you're not available to watch the flow live, again, download the app. In the flow play section, we're going to send out only the best of the best trades. And that's that 86% success rate of 10% or higher. That's what I'm talking about, is that flow play section of the app. So if you can't watch flow on a specific day, the app is going to send you only that best of the best flow. Shri, thank you for the compliments. I appreciate that. Enjoy your weekend. Thanks for hanging out with me today. I learned the hard way this week, setting a stop loss is bad. Yeah, so again, for the right flow, we just don't use stop losses. And you have to position size so that if it turns against you, it doesn't hurt you. And you guys, again, might not want to subscribe to that method, but the way Charlie and I trade, for the best top tier flow, we just don't use a stop loss. If the big money is confident in the trade, we're going to stay in it with them if it turns against us. Are the alerts affecting the price of the flow because of the number of us following? We don't really have that many people that are going to be able to affect that for the most part. It could technically, if we had 6,000 people all buying 1,000 contracts, it could, but we don't have that situation. And remember, it's the big money that's entering these trades. We're just following along. So we're kind of the small fish hanging on to the big whale. We're not really having the ability to affect the price. It's the big money that has the ability to affect the price. What is the recommended stop loss for non-flow play? Remember before I said you can't go by a percentage. That does not work. You have to use support and resistance. I'm really seeing that I'm not managing my trades the way I should, still missing when to sell, need to stop waiting for the moon. Yeah, so exits are a tough topic to discuss because again, people have different trade styles, different trade management rules, different risk tolerances. I'm going to be adjusting the way I manage my trade exits for flow. So exits are one of the next thing we're going to work on as far as trying to figure out how to really dial this in. It's still always going to be different for different people. How many people showed up to this? Last time I checked, it was about 216 people hanging out with us this morning. Is this where we type our questions? Yes. This is exactly where you type those questions. Do you guys buy puts? Good question. We trade puts all day long on a red market, but we don't watch flow for puts. So the high probability trades that you guys get from the app, those will never be put trades. We will not send puts there. The reason for that is a lot of puts are used as a hedge. So we trade puts all day long, but we don't watch flow for puts. Well, again, correction, some people do, but we don't trade puts from the flow because they could be a hedge. So I don't actually have puts on my screen at all. So we do trade puts, just not from the flow. Hey, Charlie's hanging out with us today. He says he's going to be studying it also. So yeah, I think, again, I'll put our record against any options trader on the planet. You name the best of the best, you name the celebrities, I'll put our record against any one of them for what trades we should be in. I do think there's a lot of improvement for how we exit these trades. And as a personal trader, I know for me personally, the growth that I can have for the next phase of my trading is going to be how to manage these flow trades better. I take a lot of gains on these trades. I don't take a lot of losses, so I'm happy with where I am, but I'm also unhappy knowing I can be a lot better than even where I am now. So figuring out the exits is something we're going to be studying pretty closely for the next, I don't know, weeks, months, trying to dial that in. We've got the entries nailed. So I'm comfortable that we can make you guys money by following the right type of flow. I'm absolutely 100% confident we can make you guys money. The thing that we need to work on next is how do we really dial in these exits? Do you watch the bullish flow section? No, that whole bottom corner, I don't care about that. I'm just watching. The only thing I'm watching throughout the day is this middle portion of live flow. And I am in the chat room. Let's go to the main chat room here. It's not too active on weekends. But if you look for, that's me, 7-star Mike _mod. If you look for that name, that's me live throughout the trading day, all day, bell to bell, 5 days a week if the market is open. So all I watch is that chat section and this middle section here. I like the chart pulled up next to me. So when I click on flow, I have the chart for it, but this bottom section I don't use. I don't actually chart based on this. It's nice to see. So the only thing I'm really looking at is this middle section for flow. I don't look at historical, I'm just on the flow. How do you stay focused throughout the day? That is tough. I work from home. I don't have any boss. I don't have anyone looking over my shoulder. I do have 2 cats running around the house. It is tough. I do play music. I don't always play. I actually used to for a long time, and then I stopped. And recently I started playing music again, and that kind of keeps me focused. It might be a distraction for some people, but I found that for me, if I have music playing, it just keeps me focused on what I'm looking at, even though it's like I don't know. I know some people are distracted by music in the background, but for some reason, if I have music on, it keeps me focused on what I need to look at. Do you think part-time retail traders tend to take profits much earlier than pro traders? Absolutely. I think the pro traders know exactly what their plan is and they stick to it, whereas retail traders will get into a trade, be excited about profits and take it, or they've taken a bunch of losses and they're just excited to get some green. How long did it take to quit your old job and become a full-time trader? One day I'll put that story on YouTube probably. It's a funny story. You don't want to do it the way I did it. I got fed up with my retail position. I was a retail manager for 15 years. And one day I just got fed up and said, I'm done with retail and I'm going to trade full time. I was not prepared to do that. So I had a good first year because the market just went straight up. The second year I lost a lot of money and figured out, I don't know what I'm doing. I made money the first year because the market gave me money, not because I knew what I was doing. So the second year was actually really tough for me. The third year is when things started balancing out and I was getting a little more consistent. And from there, it's just grown. I will put the full story on YouTube though, and I'll give you some hints and guidelines as far as the best way to really go about becoming a full-time trader. On the downside, do you base your stops based on the stock price or the premium price? I don't base stops on anything other than support and resistance. And that's going to be based on the stock itself, not the contracts. Do you ever scalp premium? Yes. I scalp flow all the time. So flow can be used for day trading, scalps, swings. Do higher priced flow plays push to the phone tend to have a bigger increase in profits? So kind of yes, but percentage wise, I don't know. Dollar wise, yes. When we push a $1,200, $1,600 trade to the phone, those can make $200 or $300 in a matter of a day or two. It might be a lower percentage, but dollar wise, it's going to be a bigger dollar. Geospec flow, would you give this weeks or months if it goes wrong? That one's out to March, so I wouldn't really give up on it in a week or two. It's out to March. You kind of have to let that one sit, but it depends on how bad it looks. If it goes wrong, are we talking wrong 20%, wrong 80%? That one I would give it some time because there's so much time on the contracts. Yeah, Charlie's saying that Facebook flow is the last 20 minutes of the day. So we can see stuff right at the opening bell. We can see stuff at the last minute. There really isn't a time of day that the flow is going to come through. It just, that's why we watch it full time. I mean, I wish I knew I could stay in bed for an extra 2 hours because I'm on the West Coast, so I got to wake up at 6 o'clock in the morning. If I knew flow didn't come in until 8 o'clock in the morning, I would love 2 hours of sleep. But unfortunately, There's just no time frame for it to come in. The big money trades whenever they trade. We just have to be here to watch it. Norm, thank you. I appreciate the compliment there. Mike, thank you for the compliments. Bud is asking if there's going to be a replay available. This is being recorded. Sometimes the recordings don't come out okay for technical reasons. If this one comes out okay, I'm comfortable putting this online. So I will post this on YouTube. You guys will be, it won't be right away. It might not be today even. I have a busy weekend, but I will find time to put this recording on YouTube. This will be on 7-Star Traders. So go to YouTube, search bar, 7-Star Traders, and at some point I will post this online for you guys to review. Is your stop loss options going to 0? For the best of the best trades, I will let that go to 0. And the good news is we haven't really had that happen yet. Now, it's extremely rare that I'll let anything go to 0. It might happen 2 or 3 times a year. So when I say I'm willing to let it go to 0, I am, but chances are they don't. You guys got an MU play for a long swing. If the market goes down next few weeks, does it stay valid for an entry? As long as the big money stays in it, I'm okay with an entry. For the longer term flow, what chart interval do you use? Probably, I'm on a daily chart for the most part. If we're looking at something for 4 months or 6 months, I'm on a daily chart. If it's 6 months or longer, I might look at a weekly chart just for a glimpse, but I'm pretty much charting these on a daily chart. Rom, thank you for the compliment. I appreciate that. Spec aside, how would you distinguish perfect flow and risky flow? For that, take the Thursday night class. I go over the criteria we're looking for the best of the best. If you're not a member of Black Box, go to 7-Star Traders on YouTube. Again, look for understanding options flow. That's a version of the class that I give. Will, thank you for being part of the team. We appreciate you hanging out with us. Will says, I admittedly follow 60% of the recommended advice, but working towards higher trading discipline. We all are. I think I'm a pretty disciplined trader, but I know that there's definitely room for improvement there in terms of my patience, and patience meaning holding these trades longer. So I'm pretty disciplined and I still have tons of work to do, and that will never change. Do you have CNBC in the background? No, I hate those guys. I like some of them. I love Josh. Josh is awesome. And I do listen to the Nigerian brothers when they do their unusual options activity. So they're on about the same time every day. So I'll pop it in to listen to them. And then once that segment is over, I turn them off. Do you have a YouTube channel? Yes, there's 2. 7-Star Traders is one, and Trade Talk Media is the other one. Trade Talk Media is kind of geared more towards flow trading. It's not 100% flow, but it's more towards flow. 7-Star Traders has a lot of flow on there, but also just technical analysis and trading rules and guidelines that have helped make me better as well. What does my computer setup look like? I've got 4 monitors and a cell phone. So there's a lot going on next to me. When you went full-time, stocks, options, or combo, I am 100% options. I don't trade stocks anymore. Can I trade options on a cash account? Yes. Most of us trade options on the cash accounts. Amaran, fellow West Coaster, thanks for waking up this early to hang out with me. How many flow trades are you in at a time? That is a good question. Whenever the best of the best flow comes in, I'm in it. So I don't care if it's 1 or 10, if it's the best looking flow, I'm gonna take the trade. Oftentimes it's probably anywhere between 1 and 3 or 4 at a time. I don't usually have 10 positions at a time open for flow. There has been 1 or 2 times where I've had 8, 9, 10 positions, but that's kind of rare. So most of the time, we're going to have anywhere between 1 and maybe 4 at any given point. For having a full-time job, what's the best way to follow the alerts? You want to download the app and look at the flow play section. The flow play section is the high probability trades that I'm talking about. It's the spreadsheet that I'm showing you guys. You can also get alerts for the mod trades and for the algo generated alerts. So they're all on there. But when I talk about 86% of the trades generating a profit, I'm talking about specifically the flow play section of the app. Charlie's commenting here. He's had as many as 21 open positions, but still 65% of his account was cash. So that's important also. We're mostly cash. And when I say that, I mean, if we're in 6, 7, 8 positions, or at the point where Charlie was in 21 positions, if the market just straight crashed and everything went straight to zero, 65% of his account was cash, so it still wouldn't affect him. It would suck, and we would hate to have all that go to zero, but we would still be able to trade. So again, trade management is extremely important here. If you have 10 positions open and it only represents 10, 15, 20% of your account balance, that's fine. I personally can't do that because I can't manage them all. Now, if they're all longer term positions, 10, I can handle 10 because I'm not watching a 1-minute chart. For shorter term positions, I found that my max is probably 5 or 6 trades. Anything beyond that, and I just start losing focus on all of them. So for me personally, I like anywhere up to about 6 trades for short term. If they're longer term, I can handle more than that because I don't have to focus on those as closely. So Charlie makes an awesome point. The number of trades isn't that important. What's important is that you're not 100% of your account invested. Because all it takes is one bad day where we get that instant correction or worse, a crash, and your account is gone. So if you have 51 positions open and you can manage them effectively, and that still only represents 30% of your account balance, that's fine. For me personally, I just know that I can't manage that. So it kind of depends on what your focus level is. And I know for me, too many positions and I just lose focus on every single one of them. Bipin, thank you. You're welcome. I love hanging out with you guys and sharing what's made me a better trader. The thing about BBS is when I started trading options, that's when I joined BBS. And this is actually the second paid service I've ever joined because I just don't join paid services. The other one was Investors Business Daily, and I actually stopped paying for that probably 2 or 3 months after I started. So this is really the only service I've actually paid for. And when I started learning options, that's when I joined Blackbox. And Charlie and Maria and Teresa spent so much time in Q&As and answering questions for me and DMs. They helped me basically focus on the way I'm trading now. They shaped a lot of what I do. So to be in a position where I can give back and help others at this point, it feels good. So I love hanging out with you guys, sharing what helps make me better because they shared with me what made them better. Minas, you're welcome. Thanks for hanging out with me today. This is a good question. What's the biggest difference between how you trade today versus a year ago? So we've dialed in the flow quite a bit between a year ago and today. We've come up with the concept of hashtag 20. And that was really dialing in how we look at the flow. And the biggest difference is that I'm just trading a lot less. And I'm not trading less because I'm scared. I'm not trading less because I don't know what I'm doing. I'm trading less because I'm taking higher probability trades. And even though I'm trading less, I'm actually making more. So the biggest difference now is just my discipline level has gone up quite a bit as far as what trades I'm taking. My discipline on staying in the trades long enough is horrible. So that's what I'm going to work on next. But the biggest difference between a year ago is really just focusing on the right quality trades. And a year ago, I was probably trading maybe 60% charts, 40% flow. And now I'm trading 90% flow, 5% charts. So we really got this flow dialed in that it actually became the majority of what I trade. Jay, thanks for downloading the app. You should be excited because they're really quality trades. I'm not trying to sell you guys on any kind of a system. If you're members with us, you've already paid the service. I'm not trying to hook you on anything. You guys know what we do. The app is really going to help you out. So Jay, definitely download that app. Check it out over the next few days, next few weeks. I'm confident you're going to be excited about the results for that. Risk Taker, thanks for hanging out. I appreciate the compliment. I see you in the chat all day. Thanks for coming on a Saturday, hanging out with me. And that's actually the bottom of the question list. So we're going to call that a day here. If you guys have any questions, I'm going to put the link up for where you can find me. I'm all over social media. That is me, 7-Star Mike or Trade Talk Media. Again, I do 2 different types of content on both of those, but they're both me. Reach out if you have any questions. We want you guys to be successful with this. If the moderators make money using Blackbox and no one else does, it's not really a good system. So we want you guys to be successful. Reach out if you have questions. Don't be shy. I am available throughout the trading day. Over here in the main chat section on Blackbox. Again, throughout the trading day, 7-Star Mike _mod. That's me. I'm there from bell to bell. So if you guys have questions about a trade you're in or about flow you're looking at, but you're not sure about it, pop into the chat room, ask. If you're on Discord, I'm not big on Discord, but there are, I think, 9, maybe 10 other moderators that are on Discord throughout the trading day. So there's always a place where you guys can get help with this stuff live during the trading day. So reach out if you have questions. We're here to help. On that note, go off and enjoy the rest of your Saturday. I appreciate you guys hanging out with me. If you're on the West Coast, definitely thank you for getting up early. And I'll see you guys in the chat room on Monday. Thanks a lot, guys. Enjoy your weekend.